Hello, good morning, viewer. Thank you for returning to my channel, Hocantalk. Now, this morning, okay, let me comb my hair. Now, this morning, I actually wanted to touch on a new topic. This topic is quite familiar to most of y'all, I believe. But I think there are still a lot of things behind this topic that y'all should be able to benefit from my video. So, for this video, again, I will be using English and Chinese. Both languages. So for those people who want to listen to Chinese version, can wait for my Chinese video to be uploaded. I think one day after the English video is uploaded. Again, my only request is do subscribe to my video so that I have the motivation to continue to produce useful video to educate everybody so that you all can benefit from my video, and also hope that the knowledge you gain can benefit your career and your general business decision. Okay, now today the topic will be on real estate investment trust, what we call REITs. REITs in Chinese is called 房地产投资信托基金. So I believe a lot of people have heard about REITs and also invested in REITs. But for this video, I'm going to tell you a little bit more from the historical structure and also the current market position of REITs so that you can even know more about REITs globally. Now, before I go into any other aspect of REITs, I want to highlight the structure of REITs to everybody. You can see from the next slide, the structure is in the middle, there's a REITs. It's set up as a trust structure, registered as a company in Singapore. I'm using Singapore example. So when you want to register a trust, trust as a company, you go to ACRA. So you register a REITs as a legal structure, and then you sell the units to investor in an IPO, initial public offering. So if you look at this structure, the REITs will set up multiple special purpose vehicle, 1, 2, 3, and then under the SPV, they will own one property. So the segregation of all this property portfolio is to ensure that any risk and return associated to one property will be confined to one legal entity and will not spill over to the rest of the legal entity in case something wrong happen. So for a REIT, all this property is held in trust by the trustee, so that the public who own the unit trust of the REITs know that all these assets are in good hand of a trustee which has a different balance sheet from the REITs. Okay, now the REITs is managed by an investment manager, so usually licensed by all the respective authority in the world. So they must have an investment manager license, so they manage the REITs and they will manage all this property, okay, according to the regulation requirement. So this is the structure of a REITs. And the reason why REITs exist because they wanted to allow individual investor, retail investor to also invest in property, invest in real estate without huge capital commitment, because in the past only rich people can invest in property, but for retail investor they can only they can't really invest in big property unless they have a lot of money. So in this case, they actually invest in an instrument called REITs using smaller capital outlay. So in short, REITs is a kind of securitization, meaning they securitize the equity holding of property into unit trusts which are freely tradable on stock exchanges. Now let's look at the historical development of REITs in the past. So actually REITs started, I think the slide I get it reversed. Now REITs started in the year 1960 in USA. So USA at that time, they passed a new law called the REITs law. Now the purpose of that REITs law is to allow more retail investor to own property to enjoy rental income without coming out with a huge capital outlay. So at that time, someone think of a law called the REITs law, REIT Act, and then it was signed by the president of the then USA president. So that was in 1960s. And because of the new law, the REITs development speed up. So in the year 1969, another 3 countries start to implement REITs legal regulation. So like Netherlands, New Zealand, Taiwan. there are some other country in between, but I only list down those important ones, those countries that are familiar to you all. So in the year 1971, you see Australia also start to allow REITs listing on their stock exchange. And come to the year 1999, then Singapore entered the market, followed by Japan in the year 2000 and South Korea in the year 2001. How about other countries? Other countries like Hong Kong and France, they actually entered the market in the year 2003. And for Malaysia and Thailand, they entered the year in 2005. For Germany, Italy, and UK, they entered the market in 2007, followed by Philippines, Mexico in 2010, and Vietnam 2015, and China 2021. Now I need to talk about the types of REITs. Okay, the type of REITs. There are basically three types of REIT, three types. Now, the first one is called the equity REITs. Equity REITs meaning the REITs actually own the property directly. Okay, so this is called equity REITs. The second type of REITs is called mortgage REIT, meaning that the REITs itself doesn't own the property, but they own the debt instrument issued by the property owner. So this is a gearing kind of REITs, meaning that you don't own the actual property, but you own the IOU or the debt issued by the property company. Now, the third one will be a hybrid REITs. REITs combine equity and mortgage together. So basically, there are three types of REITs in the world. Now, how about the market size of all these different types of REITs? Now, the equity REITs right now globally is about 80%, and mortgage REITs and hybrid REITs only constitute 20%. There are reasons behind all these things because traditionally, mortgage REITs and hybrid REITs, they are higher risk, and because of leverage, because of debt involved. So basically, the size of the mortgage REIT will not be bigger than the equity REIT because not all the value of the property can be linked to borrowing, like the loan to value ratio. Usually, a bank will not lend 100% to a property. So logically, from a debt point of view, the mortgage REITs will always be smaller than a equity REITs. But also there are some historical reasons why mortgage REITs are smaller. This is due to some reason. What are the reasons? Now, I mentioned the history of REITs in 1960s. USA start the REITs Act, REITs. So after the 1960s, a lot of REITs being formed in USA, and also a lot of other countries also form REITs. But at that time, REITs are not highly regulated. So in terms of how much they can gear, the leverage, how much income to be distributed, what are the tax benefit, the tax structure for the unit trust holder, a lot of these things are also not governed properly. And also the governance, the manager who manage the REITs and all these things that did not operate in a very proper corporate compliant governance kind of framework. But anyway, a lot of REITs evolved, so the whole market flooded with a lot of REITs because especially in the Western market, people created this instrument as a form of securitization, also for trading and investment and speculation purposes, which is something a little bit different from the Asian objective of setting up a REIT. So for US market, they just want to add that more diversity of the financial product and allow more participation from all kind of investor. Now, comes the 1970s, actually at that time, there was a crash. There was a crash in the REITs market and as well as other financial market. But at that time, because the REITs are less well regulated and the corporate governance is not really fully proven. So because of the weakness in the 1970s, there are two weaknesses. Number one is the oil crisis. Okay, everybody know about the 1973 oil crisis. After that, followed by a few years of recession. And these two events melt down the REITs because a lot of the property REITs are highly geared. So they don't have enough money to pay interest, and that resulted in a lot of bankruptcy of REITs. And during that period, actually mortgage REITs, which are higher risk, because they don't own the property, they own the debt issued by the property. So actually it's two layers of securitization. The property owner securitize it one time using the debt instrument, then the mortgage REITs come in, sell this debt instrument to investor. So actually created two layers of securitization. When you create layers of securitization, it created higher leverages. This is exactly what happened to some of the company that disallowed to IPO in China recently. If you look at history, I won't mention the name. But anyway, during the 1970s, the REITs, a lot of REITs bankrupt and crash. So, and mortgage REITs, because it's higher risk, and also likewise for hybrid REITs, it almost go to zero because a lot of people lose money. That's the reason why traditionally, come to now, market focus more on equity REITs rather than mortgage or hybrid REITs. So the distribution in terms of global market capitalization is 80% equity REITs and 20% mortgage and hybrid REITs. For all those REITs in Asia, in my experience, I think most of them are equity REITs because Asia government and Asia country are more risk averse. They don't want a lot of speculative in the REITs industry. They also don't want people to buy REITs for price appreciation. They want people to buy REITs for income return. So in Asia, almost all the REITs listing are based on equity REITs, meaning they actually own the property inside the REITs, not own the debt instrument. So after all this bankruptcy, the crashes in market, a lot of people lose money. Then in 1986, USA know that they have to do something to the REITs industry. So what they do, they come up with a Tax Reform Act of the 1986. Now the a REITs can only be successful if it's supported by tax incentive or tax reform, meaning that you will buy a REITs if the REITs offer you certain tax benefit on top of the income generating from owning a property through REITs. So the tax reform of 1986 is a very important milestone in REITs industry in the sense that the USA government put in tax benefit, tax reform, proper corporate governance, all these things into management of REITs. So at that time, they actually put now 90% of distribution of all the income of REITs to the unit holders so that they can enjoy tax exemption and all this kind of ruling. It started in the year 1986 from the Tax Reform Act of 1986. So a lot of the Asian countries, when they launch their own REITs, they also follow closely what was being reformed in the act. Of course, they add in some of their local element to make their REITs more accommodative to the local investor and local economic structure. So now you have a brief history, you know what the brief development of REITs. Let's dive in a little bit deeper on the micro side, meaning the listing of REITs requirement in 3 countries. I actually named USA, Singapore, and China. Of course, I can't do so many because I cannot cover so detailed and so many countries in this video. So I will pick only the few that I believe my viewer are more interested to know. So I also didn't go very deep into to break down all the listing requirement, but what I do is I just put down the 3 key. So for example, for USA, the market cap, when you go for REITs listing, you must achieve a market cap of at least 1 billion US before you can qualify for listing. See my hair dropping. Now for Singapore, you must be at least 300 million Sing dollar in market cap. In China, it's lower, it's renminbi 300 million. Now how about the income? Income from property for USA, to qualify as a REIT, the income from property must be at least 75%. Now, the income in Singapore from REITs, from property, is also 75%. For China, it's not clearly stated, but they only say majority. So for distribution, in order for a REIT to qualify for tax exemption, they have to distribute most of their income out as dividend to unit trust holder. This is the requirement under the 1986 tax reform of USA. They want to make sure that the manager actually distribute all the money out to the unit trust holder so that to honor the income stream that the investor originally wanted to achieve when they invest in the REITs. Because REITs is a kind of instrument whereby to allow retail investor and institutional investor to own a piece of the property industry and enjoy the rental income without coming out with huge capital outlay. So in order to qualify for certain tax benefit for the REITs itself, they have to distribute 90% of the income under USA law. In Singapore, it's also 90%. In China, it's also 90%. Now, I want to spend a little bit time on this 90%. Now, my viewer might ask me, what happens if a REITs fail to distribute 90%? They only distribute 80%. Now, when they distribute 80%, that means the tax status, exemption status of a REIT is gone. No longer. So if they distribute less than 90% of the income that they make during that financial year, then all this income will be subject to the corporate tax rate. They have to pay tax. So in this case, for the case of Singapore, is 17%. For the case of China, is 25%. So if a REITs, the investment manager, decided not to give out more 90% or more of the income in that fiscal year to their unit trust holder, then they will be slapped with the 17% corporate tax in the case of Singapore. So this is a threshold. They have to do above 90%. Then some viewer will ask, okay, if a REITs distribute 90%, then what happened to the balance 10% that stay inside the REITs? Is it tax-free? The answer is no. The 10% that stay inside the REITs will have to be paid normal corporate tax rate, and in Singapore, 70%. Only those 90% that's being sent out as dividend to unit trust holder, no need to pay corporate tax. So that's the reason why I need to explain this distribution in more detail so that my viewer can understand clearly. Okay, now we come to something more macro to let you all know that the biggest REITs market in the world, so that if you want to look at REITs as an investment, you can review all these market for your own convenience. I list out the top 10. So for simplicity, I'll just quickly go through some of the names here. Like USA is number 1. They have about 3 trillion market size. Japan follow number 2, 280 billion, and Australia number 3. And Singapore, surprisingly, we are we are the top 5. We are 120 billion. So the rest you can read through from my slide. So I won't go through in detail. So these are the top 10 REITs market in the world. Now, if we compare, again, I can't compare all the country in the world, but I just want to compare only using some 3 market, which I think my viewer will be keen, will be USA, Singapore, and China. So I will compare the REITs market in these 3 market so that to give you all some snapshot, some overview about how these 3 countries compare to each other. Now, for USA, Singapore, and China, USA, of course, is the earliest one. They started in 1960. Singapore, they start in 2002. And China, the policy mentioned in 2020, and they actually started listing in the year 2021. So China is a very newcomer. The size, USA is the largest. That's understandable. Singapore is a regional hub in Southeast Asia. We are the biggest here. And China, because it's new, is still considered small in terms of market cap. Now, the investor allowed for the REITs in USA, both retail and institutional allowed. Likewise for Singapore. But in China, it's mainly institutional. Now, in the past, there is some misconception when China first launched the REITs in China. A lot of people think that retail investors are not allowed to participate. And even the secondary trading cannot be allowed by retail investors. The answer is wrong. Now, at that time, at the IPO stage, meaning the primary allocation stage, only a little bit of the quota is given to retail investor, not many. Most of the IPO allocation is given to institutional. But when it comes to secondary market, retail investors are allowed to participate. They are allowed to buy and sell REITs, China REITs in the stock market of Shenzhen and Shanghai. But again, the REITs market in China is not very liquid. Now, how about the returns, the yield? Now, when investors buy USA REITs, they are looking for income plus growth, because USA REITs are more flexible. They can diversify. They can acquire. They can leverage. So the REITs itself can grow bigger. Likewise for Singapore, they can also grow, but for the mentality in Singapore, when they invest in REITs, they are looking for income and stability. There are still investors who look for price appreciation. They want to trade the price, but a lot of them are a passive income investor hoping that the REITs will generate income. But that doesn't mean that the REIT price is not volatile. It's equally volatile, but the mentality of investor are a little bit different. Now for China, the yield for China REITs are generally lower. Why? Because the asset for China REITs are only limited to infrastructure asset. What are the infrastructure asset? Toll road, highway, warehouse, cold storage, uh, you know, maybe data center, yes, or solar panel, these are infrastructure, renewable kind of energy. So typically infrastructure give people generate lower income, but very stable income. So because of the stability and the low income, the yield for China REITs are generally lower compared to USA and Singapore. But there are also other reasons contributing to the lower yields, which I'll explain later on in another slide. Now the next few slides I will go through quickly because I think to make this video complete, I have to list down the top 10 REITs in all the three markets that I mentioned just now. So without going into details, you can actually cut and paste my screenshot. So the top 10 USA REITs are actually listed down here. You can see Prologis remain the largest REITs in the world. The rest you can see they have a telecom tower, they got data center, they got warehouse, they got logistic, all kind. Okay. Now how about Singapore? I also list down the top 10 Singapore REITs here. Now again, I won't go into detail. You can go through this yourself. And we have but Singapore REITs are quite internationalized, meaning a lot of the REITs money is invested overseas. Because basically Singapore is a small country. In order to keep growing your property portfolio, you have to buy more property. So sometimes you have no choice but to go overseas and acquire more property. So Singapore REITs are more internationalized from that aspect. Most of the property come from overseas. Most of the property portfolio come from overseas. So from here you can see the top 10. A lot of them are owned by the government, Temasek, and all these. Actually, most of them except Suntec REITs. China, I mentioned China also have a REITs market since 2021, but China REITs only limited to infrastructure project. Office building, all these things are not allowed to be listed so far as a REITs in China. So not surprising, the top 10 REITs in China, these are all linked to highway. You see expressway, highway, you see communication tower, you see renewable energy, you see industrial park, which is also considered a infrastructure, and likewise for cold storage warehouses. And the next slide, because there are I can't fill out all the 10 in the previous slide, that's why I spill over to the next slide. And you can see one of the top 10 is a solar REIT, solar panel REITs, meaning it's a renewable energy. Okay, the next few slides will be very important because a lot of people ask me, hey, how do you value a REITs? There are so many REITs now. I think there are about 12,000 listed REITs in the world, 11,000 plus or 12,000. So there's so many REITs. How do we evaluate? Now I actually put down the REITs valuation matrix here, meaning some of the ratio that a lot of investor or analysts use to value REITs. Now traditionally, price to earning and price to book is not a good indicator for REITs because of the accounting treatment. So when you come to REITs, you don't look at price PE ratio or your price to book. Price to book is a historical book value, so it's not a very healthy measurement of REITs. Now, price to earning, again, the structure of REITs is a little bit different because on PE side, the earning stability more or less erase the usefulness of the PE ratio. There are other ratios that are used by investors and analysts, so I'll list out a few of them. The number one, people use funds from operation. Mean in here FFO. FFO equal to income made by the REITs plus depreciation plus amortization, because depreciation and amortization are accounting treatment which is non-cash flow related. The REITs doesn't pay this amount of money, but accounting treatment require them to depreciate the property owned by them over a certain useful life. So accounting reason why the profit of a REIT have to minus away the depreciation and amortization, but there's no cash outflow. So in order to calculate the actual fund generated from the operation, we have to add these two big items back into the income. So for FFO, funds from operation is equal to income plus depreciation plus amortization. Another ratio people use to value REITs is called the adjusted funds from operation. In this case, it's called AFFO. It's equal to FFO minus capital expenditure, because after you calculate the net amount, the money that you make from operation, the REITs need to spend money to upkeep the property, paint the property, repair the property. So all these expenses are called capital expenditure. So because of that, you have to minus away to come up with the adjusted fund from operation. Okay, so this is another ratio that people look at. Of course, there are other very common ratio like the net asset value. The net asset value in this case, they actually revalue all the property of a REIT and then minus away the debt, the amount of money the REITs borrow from outsider. Now, the last one will be considered the yield. We call the cap rate, meaning what is the yield of the property. Now, yield, sometimes they actually use it to divide by the market price of the unit trust. This is called the market yield, okay? But the actual yield from the property is called the cap rate, meaning the income from net operating minus away all the expenses and divide by the market value of the property. So this is the cap rate to evaluate the yield generated from property, not the yield generated from the unit trust, okay? So these are the things that some analysts and investor, be it retail investor or institutional investor, use to value their REITs. Now, just how I mentioned, China REITs have generally a lower yield. And I mentioned some reason. One of the reasons I mentioned is because the asset in China REITs are mainly infrastructure. But there are more reasons in addition to that. So as a promise to viewer, I said I will discuss this in detail. I have produced another slide, and hopefully you can see from this slide what are the other things. Now, number one will be the policy objective. Now, Chinese government do all this infrastructure REITs to allow them to lease is not to create a speculative market or for people to make money from it. They actually wanted to unload this infrastructure asset to allow the backer of this infrastructure asset to unload this asset to the capital market so that they have more cash to develop new infrastructure infrastructure. So this is more a policy-driven kind of thing. It's not to create this, let people trade and then make money or do whatever. So number two factor, infrastructure asset, lower risk, so lower return. Number three, because in China, capital control, the demand for financial product is higher than supply. So when these REITs come out, institutional demand, the insurance fund, all these will quickly buy a lot. And when the demand is higher than supply, the price of the REITs in China will go up. That will push down the yield. Likewise, secondary trading, a lot of retailer also, even though it's not liquid, but retailer also like to buy China REITs for their income stability. So sometimes the China price, the REITs is higher than the fundamental, and that will squeeze down the yield. Now, another factor is for China REITs, because it's an infrastructure REITs, you need specialized operator. Because an investment manager might not know how to operate a solar panel infrastructure. So you need a specialized operator to run a cold storage, to run a solar panel infrastructure, to run a wind farm and all this. So with the additional operator, there are additional fee to be paid. So generally, because of higher fee, the income level of China REITs are lower. The fourth reason, another factor is regulatory factor, because China doesn't want to have speculative kind of a trading environment for this REITs product. They actually limit the leverage, limit the speed of acquisition, and to make it less growth minded, meaning that the REITs is more to generate income rather than generate growth. And because another factor is because these are infrastructure asset, the cash flow that can be earned by this infrastructure asset are also highly regulated by government policy. And because of that, you don't see a lot of surprises in this cash flow. Any increase in prices need government approval. Okay, and that also means that you don't expect a huge jump in price and there's a huge jump in yield. So generally, that's the reason why the yield in China REITs are lower. Another factors will be questionable growth because of the regulatory constraint, and also because of the niche asset that they can only buy. They can only do infrastructure. So logically, the growth will be lower because you can't buy any other asset except infrastructure. The last one is called a perception bias, in the sense that a lot of people in China, when they buy this China REITs, they think that the government will not allow it to fail. So there is also a kind of perception that is government backed. So because you think that it's safer, you don't require a higher yield. So these are all the 10 factors that affect the China REITs to be slightly lower than the rest in Singapore and USA. Now the last slide, if I don't talk about the tax treatment of REITs, then I think the video is not complete. But I can only touch on a little bit on the tax side because this is another very, very sophisticated and very, very deep topic. Now, the capital gain tax treatment of REITs in USA, everybody got to pay capital gain tax. USA is no choice. No? But for Singapore, if you are a non-trading corporate, meaning you don't, your main business is not trading in shares, then there's capital gain in selling the REITs. You are not supposed, you don't have to pay capital tax. Just likewise for individual. And in China, currently individual exempted from capital gain tax. But again, this is policy. Yeah, policy can change anytime. Okay, so currently this is the status. Okay, now we come to the end of this video. I have talked about the historical development of the REITs. I've talked about the global aspect of the REIT. I also give you the structure of the REITs. I also mentioned the market ranking of the REITs, and I also highlight all the top REITs in the respective market. I also compare USA, Singapore, and China. I also give you what are the valuation matrix that you have to look at when you look at REITs. Because PE, price to earning, and price to book are not very good ratio to measure REITs. And last, I talk a little bit on the capital gain tax regarding comparing USA, Singapore, and China. So okay, thank you for watching my video. I hope now you have a very good understanding or at least an overview of REITs. And again, do subscribe to my video. It's really difficult for me to continue the effort to do all this kind of video. And also please please subscribe to my video, circulate my video to all your friends so that they can also watch and subscribe my video. Okay, thank you very much. See you next video. Bye bye.